Aus DeFi Association on the YouTube. If you follow us on Twitter or Instagram, we've got it in our link tree, right? Or the website is defi.org.au. I don't know how we were able to get that domain. It wasn't taken, but it shows we're still early. And so we've done some really great events. We had the Aus DeFi Meetup last week in Sydney, and that was recorded. And so there's a lot of great talks from that as well. And you'll hear some of that today. But I hope you enjoy. When this wraps up, we usually hang around here. We go upstairs and drink. If there's stragglers, we'll go eat. And also, I just wanted to make mention that tomorrow there's a great event going on. Where's the Sisterhood folks? Right here. So we'll bring them up later on to tell you guys about an event on in Melbourne tomorrow. So you guys are having all the fun whilst I fly back to Sydney. So anyway, before we kick off, where's Arturo, my co-founder? There he is, Arturo. All right, grab the mic and grab Nathan. Wait, don't grab Nathan. Bring Nathan up. And we're going to talk about governance and some other stuff.
Hi guys. My name is Arturo, and set the Australian DeFi Association up with Mark about a year ago. And we also run Not Centralized, which is a venture studio where we help Web3 businesses with a few different things, including community building, tokenomics, smart contracts, and capital raising. And here we have Nathan, one of the most brilliant minds I've seen in the space.
Hey everybody, I'm from Zerocap. We're an institutional crypto firm. We've got a lot going on all the time, but I work in the innovation division, and that's sort of how we can better the space and not really focus on what's been done, but what can be done to prolong, progress crypto and sort of make it more fitting in the environment, which sort of leads us to regulation that we'll definitely get to, but how we can coexist with regulation whilst innovating, which sounds sort of counterintuitive and oxymoronic, but there's a way, and we'll get there.
So we're going to be talking about governance to start with. And governance is a really, really general topic, right? So we'll start off with describing what governance is, and we'll make it a dialogue here. What the issues with governance are when implemented within DAOs and actually the crypto space. And then we'll kind of jump into regulation and taxation, which is kind of the real world version of governance. So Nathan has been doing a lot of work in terms of understanding what actual governance is. And governance is one of those terms that we all use, but we actually don't know what it really means in practice, which is not good, because a lot of people have opinions about something that they actually don't know anything about. Nathan, on the other hand, does know. So let's start off with that. What is governance?
Yeah, so it's a really good question. I think governance is sort of not just specific to crypto. So the general definition would be that a way to sort of make decisions. Oh, what? Better? Closer? Yeah. All right. Yeah. A way to make decisions based on based on what the people or participants want to see, and allowing a governance model that actually considers their needs and values the whole way through, rather than being periodic, and then allowing a mechanism where we can govern based on the people's needs at one period, and then have a whole prolonged period where their views and needs are not considered, and then at the very end of that period having their views represented again, which is sort of what governance looks like at the moment, with, like, not in crypto, in the real world, where we'll have an election period and we'll have regular elections once every 3-4 years, whatever, and their views will be considered, the people's views will be considered at the beginning and the end, and the whole way through it's sort of like do whatever, because there's no consequences till the end of that election. So effective governance would seem to be a way that we can consider people's views the whole way through, and ensure that they're considered in how the wider organization or community or system progresses itself.
Okay, so DAOs obviously come into the conversation, right? And I guess that it's common knowledge that you can see DAOs, or rather the crypto space, as this social experiment where you're basically kind of running a bunch of simulations. It's like a Monte Carlo engine of a bunch of different strategies for governance, right? Which is something that we haven't really seen before. I mean, before, if you had a governance model, it took about 100 years and a lot of bloodshed to move from A to B, right? Now we can do that in the matter of just a few months. But the question is, do you think that DAOs actually help understand the governance problem?
Yeah, it's a really good question. So the governance in crypto and for DAOs have fallen victim to what's known as the Lindy effect. And that's sort of the idea that because something's worked and not been changed, it will continue to work, which is pretty much most problems in the world. But without progression to ensure something does not become stagnant, it just fails. So maybe at the beginning, governance for DAOs worked in this experiment, but as time went on, more and more problems came about. And the biggest problem, I guess, now in the experiment of governing DAOs is that voting power is proportionate to the tokens you own, which means if you have more money or are an early investor, you get all the power forever until you sell it. So it becomes sort of a speculative market to see who wants
Give me your mic. Yeah.
to see who is willing to pay enough to obtain voting power. But again, at the beginning, those who bought early now have all the power. Lucky touch.
So do you think that's different to the way that traditional governance models works? These are all Zerocap's views, by the way.
Yeah. That's what I was thinking about. In my personal view, well, in a democratic country, you shouldn't be able to buy votes, but large corporations can sponsor parties and coalitions, which often results in these parties needing their money to support their marketing campaigns. So without the funds being provided by corporations, they will not get re-elected and will not get enough seats. So to an extent, large corporations with significant amounts of money are very much able to buy votes, which is the same issue as what we're seeing in governance. So even if I own a token and I can vote, it means nothing because someone's got 1 million times more power than me. So although it was originally a great idea to say, oh great, on-chain governance, this is going to be awesome, because now for the first time, people who have skin in the game can actually vote and have their views and values and their vision for the corporation, protocol, DAO, whatever, integrated, is not really how it's playing out at the moment.
It's funny.
How about your views?
It's funny. I heard a really smart guy say once that the difference between a first world country and a third world country is that corruption is democratized in a third world country. Everybody has access to it. Now, if we think that it's not the right solution, it's not the right way of going about it. I think that the big problem that people have is that, and this is a standard Web3 issue. You kind of expect people within the crowd to find a solution to the problem without actually understanding what the problem is.
Hang on. And by the way, before we do this, for the panel and for this one, let's try to save questions at the end, but we'll do this one now, okay?
Some time ago, I tried to set up something like this, and the idea was that it was one person, one vote, no matter how many coins you had. So you could have millions of them, and that was how you were meant to democratize it rather than the money. So I'm just saying that it seems that it's kind of skewed from a government's point if it hasn't adopted that.
That's a great example. I think that the problem with governance is that we don't actually know what good governance means. Governance is effectively a strategy that is supposed to weight the vote that specific individuals within the subset that is allowed to vote, how the effect that they have on the final decision. Problem is that we don't typically know what the final decision actually should be. And that's a little bit of a scary concept, right? Because we see that in democracies all the time. We don't really know what a fair outcome is. It depends on who's judging it, right? Now, DAOs will not solve that. We can implement different types of strategies to kind of evolve a set of rules, but at the end of the day, the issue is that we have two measures to the outcome. One of the measures is the actual quantitative measure, which typically means money, And then you have an emotional measure, which is, well, it's emotional, right? And that's going to be dependent on the multiple individuals that are part of this thing, right?
Yeah, I think on that, there's sort of an idea of, with crypto, we can maybe build perfect governance, but it doesn't really exist because people aren't perfect. So if you were to say that every single person in every single situation can make optimal decisions, you're wrong, because there's time pressures, there's cognitive pressures, and there's the fact that we don't know everything, right? So it's an interesting idea of sort of, there are known knowns, what we do know that we know, there are known unknowns, what we do know we don't know, and then there are unknown unknowns and unknown knowns. And because of those two things, we can't be perfect, right? So the whole way through, whenever we're making a decision, it's maybe satisfactory, but never perfect. So in that model, if we're giving everyone one vote, which is probably a step in the right direction, it still won't be perfect, because how do we know if it's a good decision?
I think that another issue that we have is that we typically project the way in which we do things traditionally, but onto DAOs. And we have this notion that DAOs are supposed to be kind of, they're going to be forever. They're supposed to be immutable, stable, and what's the word, forever? Immutable? Permanent, correct. Now, imagine that you have an object that is actually permanent and it's immutable and it's also stable, right? It's almost impossible to achieve, because not even, as far as we know physically, not even the universe is stable and forever, right? It will end. On the other hand, if we're comfortable with the notion that we actually build up DAOs that are transient, that are very, very, very specific to what the purpose of the DAO is, and as soon as the purpose of the DAO, which is immutable once you set it from the beginning, as soon as that purpose ceases to be possible to achieve, or people don't want to follow it, then the DAO stops existing. It's almost like having a relationship. A better relationship is one where you actually have to work for it in your state of mind to keep on going, versus thinking that it's always going to be there, because you're going to neglect that relationship, right? That type of modeling within DAOs hasn't been seen that much yet.
Yeah, there's sort of a confusion now, and it's taking different mental models and applying them 100% to DAOs as if they exist the exact same. And that's pretty much most development, not anymore, but for the first 4 years of DeFi, it was just how can we take things that make money in the traditional finance world and re-implement it the exact same way in crypto in a single work. And that's DAOs, right? But what would make more sense if you wanted to have effective governance, it'd be to achieve a single purpose, which is what we were saying before. So if we have a DAO that's going to last forever, well then, is that a company? So is it just to make money? And if it's just a company, well then, is there a value beyond we want to make money? Maybe they can hide it and not be that open about it, but ultimately, if it's transient and always changing, the idea of it is to make money. Whereas if you want to build a almost perfect governance model, then realistically it should be to achieve one purpose. And once that purpose has been achieved, and this vision for how the world should be, or how the crypto world should be, is fulfilled and actualized, then the DAO should end, because the purpose has been achieved.
Yeah. So let's flip that conversation over on its head and talk about a very specific form of governance, which is actual regulation. Now, there's obviously a lot of conversation about how we regulate Web3, and there's a lot of thought about how to identify or describe Web3 within the current legal context. People are really scratching their heads because they don't really know how to do this, right? And they talk about, what is an NFT? How do we tax an NFT? How do you describe an NFT from a legal point of view? And it's really interesting to see how many don't realize that conversation is almost saying, well, just because securities are written on a piece of paper, let's talk about how to regulate paper. And how do we tax CGT events on anything that is paper related? Now, that conversation takes many different directions, right? We have token mapping, we have conversations about how Treasury goes out and has questions to the community, how do we tax things and so forth, right? But if if there's an alternative to this, which is that you actually just move on everything that lives off chain but on chain. So traditional finance, effectively Web 2, you move that over to the blockchain, which gives traditional finance effectively a lot of the transparency. Now, from a governance point of view, that's really interesting because a lot of the governance that we do today is based on a lot of assumption, lack of information, lack of transparency and opacity and so forth, right? But imagine if you effectively had traditional finance run on blockchain and you could see the paper trail, let's put it that way, of all of the different transactions and the effect that different rules have on the way that the economy actually moves, right?
So how would that look at play? Or
well,
that's a question.
Yeah, that was good question. So we have a working model here, which is it's a smart contract infrastructure that effectively allows developers to, once they identify that they are creating a token that is a security, it's a financial product, and bear in mind that many of these tokens are actual financial products, then if you don't want to go to jail, you want to do things properly, and properly means really expensive because you need to get lawyers and you need to tell them, well, this is what I want to do, and you need to get their okay and so forth, right? You need to get their advice. Now, that obviously kills off innovation because most developers don't have the funds to be able to pay for this type of legal advice. So the working project is effectively that you have a set of templates that are almost Open Zeppelin-like templates, where these templates allow you to represent various financial products, like for example, securities, share registries, you name it. Each one of these products is effectively permissioned, right? So in this case, we're not talking about regulating Web3, where Web3 is supposed to be permissionless and it's supposed to be decentralized and all these different things. We're actually more talking about taking traditional Web2 objects and moving them on chain. Now, the second that you do that and you are able to show that you have the control to apply the compliance that law requires you to apply, then all of a sudden you end up with, let's call it an ecosystem that is a fully regulated ecosystem but on chain. And because these different templates follow rules that are jurisdictional, let's say Australian rules, then you can achieve a blockchain environment. Sorry, you can achieve regional compliance within your ecosystem while still having that global composability, which is it's a pretty simple solution in the same way that everybody else does it, right?
But you pretty much have an SDK for regulation and compliance.
Yes. Yeah. No. Yeah. Pretty much. But then we actually start talking about the governance side, right? Because all of a sudden we have that ecosystem that is enshrined in smart contracts, and we can actually see, well, making this change in this smart contract would potentially have this effect on the economy, right? And then we can actually have a governance that is driven by data instead of driven by ideas and politics. I mean, you listen to the politicians today, and what they say is mostly crap because all they're doing is throwing shit on the other side, right? Well, as in this case, you probably still have that, but at the end of the day, you would have data to actually show, well, look, this is the actual effect of this type of policy, right?
Yeah, so it adds that feature to governance of objectivity rather than everything being subjective and what I think's right, which is huge, crucial. And I think what could be a cool experiment once Layer C's out, by the way, it's called Layer C, once that's all out, is how would you build an effective governance model with Layer C? So and we were sort of spitballing a few ideas before, but imagine if we could have a regulated token for an Aus DeFi DAO, where it's all based on Australian regulation, but the actual metadata of every token specifies what can be done with it, which will sort of mean that we could have a really effective governance model, again, not perfect, but really effective, whereby I can say that if I own one token, I can't send it to anybody. Because the data says only the Aus DeFi DAO issuer can actually send tokens and mint tokens. right? And then they'll say, all right, but what if we want to delegate? Because one issue in governance at the moment is, all right, I'm essentially an ill-informed individual voting on governance proposals because I don't have the time to, because I have a job and I don't have the free time to research every single proposal that comes up, create a research piece, consider both sides, consider the actual implications of it, again, without data, purely based on my own view, and then vote on it. So instead we have these delegates. So most effective DAOs, again, not on the idea that one person equals one vote, but has delegates, right? And the delegate model is awesome. It sort of runs in the form of a liquid democracy where I can delegate, undelegate whenever I want, and also vote for myself, which is a really cool idea. But the problem is if I'm delegating, well then what if I take my tokens? But if you add in the ASC stuff, you could say, as well as being regulated and as well as saying you can't send it, we can also say that you can delegate this, that's different to sending, and we can ensure that the person who now owns the token, who's receiving it as a delegate, can't send it, can't spend it.
So it's almost like encoding a technocracy.
Yeah, exactly.
Yeah, democratizing a technocracy.
Yeah.
That's pretty cool. I think that we can either have questions or wrap it up.
I want to kick you guys off the stage because that's too much governance, too much, I'm kidding. Who knew governance could be sexy, folks? Like, okay, one person did, so thank you very much, Greg. We will put that on chain because people need to know that you think governance is sexy, because we do too. But everybody, if we please, and we will have more time for questions, so even if you want to ask these guys questions towards the end, because there's going to be more talks that might relate to this, we'll bring it back up on stage, so question time at the end. But for now, thank you, Nathan. Thank you, Arturo.
Thank you.
Leave the mic. And just a quick announcement before we get the panelists and our awesome panelist host, our moderator, up on stage. This is recorded, okay? So I know that up the back it's been a bit hard to hear at times. We're recording it onto wireless Rode microphone things, and we'll do some video editing, so we should be okay. All right, so the sound, and this is not even the microphone, this is just my voice. So there you go. All right, the lovely Liya, please come up on stage and introduce the panel.
Hello. Hi everyone, my name is Liya. I'm part of Reinvention Group of Sydney and also New South Wales chapter lead for Aus DeFi. On the panel today, we've got Olga Bubnova from BgainComms. Please come up. Ash Vanderspiel from Jubi DAO. And Gilly Lewis from EY. Welcome. Okay. So should we just kick off with very quick introductions? Olga, do you want to sort of talk a little bit about BgainComms, what you guys do, and sort of, we'll then go down and do the intros.
Yeah. So BgainComms is a company doing marketing for tech and both Web 2 and Web 3. So we create strategies, we run engagement programs, and we create communication and engagement plans as well. So we started with Web 2 and then slowly started merging with Web 3 technology, and we just loving it. I say me, myself, and I. Yes, three of us. Yeah, that's us.
So Ash and I'm one of the founders of Jubi. We have smart contracts or smart contract wizards, so no-code tools for you to be able to generate smart contracts that manage your native token. So specifically, if you want to fundraise, you think about raising a soft, or you want to do a private pre-sale or private sale to your community, we can generate the smart contracts and have a dApp that can help you manage that. Also, I brought t-shirts with tonight, so if anybody wants this shirt, I've got 5 in various sizes, 1 medium, so whoever wants the medium better run afterwards.
That's hard to beat, free merch. Sorry guys, I don't have anything. I'm Guylian. I also go by Gilly or Gil. I'm just an all-round traditional finance nerd. I've been doing it for about 8 years between working in some retail banks and also consulting at EY doing some audit risk compliance for financial services companies. I actually took a year off the Big Four life to work at a crypto exchange, and there I saw some of the unique challenges that blockchain-based businesses face in this space, especially from a risk compliance perspective in Australia. So really excited to speak here today on some of those.
That's awesome. Okay, let's kick it off. So I guess, Olga, Ash, probably to an extent, and Gil, you guys both deal with sort of both Web 2 and Web 3, or Web 2 to Web 3, right? So the first question is, what should and shouldn't go on chain? Because not everything is fit for being on chain. So Olga, maybe we start with you. What are your views? What is suitable for being on chain? What's not? And yeah.
I think I will put it in a really simple example. So in any organization, you have this business operation and communication tool when you can edit, store, and share your documents. So can you imagine if you go back and forth with one document and it's on blockchain? That's terrible. So like it's just impossible to have on the blockchain when you on daily basis work with one document or two in different spreadsheets. So I believe this can stay, this part of the business operations can stay centralized. However, the same company can use blockchain for storing personal data, like certificates, police checks, any personal information then can be encrypted and stored on the blockchain, so it's not necessarily needs to be in cloud. So this is how I can see from the business operation perspective.
And in terms of your clients that you work with, so what kind of areas do you see them wanting to play in Web 3 if we're dealing with sort of Web 2 specific?
That's interesting because I have either Web 2 or Web 3.
Interesting. So no one's crossing over yet?
Not yet. And I think it's, but I believe it will be related to next questions, but I will just share some insights later on when there's like Web 2, what they're thinking about Web 3.
Sure.
So I from the old EY case studies that I've looked at around this and the places where I've seen EY build, I know that there are some Web 2 companies that are looking at toying with putting certain things on the blockchain. I think the classic example is supply chain traceability and being able to trace the parts, your components of your final product, and just making sure that they're going through, I'm not a supply chain expert, but going through, say, suppliers that use certain that adhere to certain certifications. Another example is the anytime you want to automate the flow of payments through smart contracts. I think that's a really interesting use case that we're seeing some people in Web 2 look at Web 3 and go, wouldn't mind getting some of that in my operations. As for what shouldn't go on there, basically anything that you'll regret, anything that you'll regret posting, anything that you'd want to edit, health records, anything that you want to keep private. I think they're the key considerations, right? And anything that, if your identity was exposed, you'd be like, no, I'm not too happy about this.
Ash?
I think that's an interesting point there. When people ask me about it, I tend to fall back on what the technology does and what it enables. I've seen a lot of people build things in Web 3 that mimic Web 2 things, and I've seen a lot of Web 2 ways of doing things that are just made so much easier by the blockchain technology. And if you look at it at its base, it's a transactional system that's distributed that includes an application layer and a payment layer. So the payment is pretty important because you can build a distributed processing platform. It's going to cost you a lot of money, and if you want that distribution to happen between multiple parties, that's going to cost a lot of money. Where in Web 3, it's kind of built in. You write a smart contract, it gets processed in a distributed way, so it's censorship resistant, and the payment's built in. So there's no worrying about like invoices and paying for your AWS bill. Like whoever uses it pays for that use. That's awesome. but that doesn't mean you can't do it in a Web 2 way. It's just different.
It just becomes more efficient.
The tricky thing of like, why shouldn't you do it? In a lot of the applications that people want to build, the tech's not there yet, and the legal and compliance. I mean, if we look back at the last 10 years, a lot of what was done in Web3 was kind of wild, wild west. And if you look at it through the current lens of legislation, that was some dodgy stuff. And I think the legislation will apply more and more as governments kind of wrap their heads around it a lot. And so I think that's probably the two things that you need to be aware of. One is definitely the legal scope. What you're building might need licenses, and just because it's possible and easy to do in Web3 doesn't mean you can just do it. You should still have a look at what legislation applies to what you're doing. And if you don't have the license to do it, then you definitely shouldn't do it in Web3, because then it's so easy to do that you will do it and be successful and then end up in lots of trouble.
And in the lack of regulation, I guess there's sort of an element of self-regulation that comes into play, right? And the whole argument of should the ecosystem be regulating itself to an extent? Does that work? What does that look like? Can we sort of riff on that a little bit? Olga, do you want to start? You look like you have some views on that.
Sorry, I had Micah looking at me. It just made me smile. So can you repeat the question, please?
Self-regulation. So the ecosystem sort of regulating itself. So at the moment, we don't have regulation. There is a lot of talk about it. There's a lot of, I guess, the government trying to educate themselves, learning. There's the token mapping exercise. But as it stands now, there's nothing, right? So we are kind of trying to regulate ourselves in a lot of ways. What are your views on self-regulation within the ecosystem?
I'm not a person, probably right person to ask about regulations, but I can provide with an example that even from a marketing perspective, if any brands are going to and advertise something on Metaverse, let's say that's what they're already practicing, and what's the sort of structure and regulations will be in terms of like terms and conditions, what they can advertise, the way they can advertise, and if something's going wrong, how they can remove that particular part of the ad they've already put in the blockchain. So I think this is from marketing and advertising perspective. That's something we need to look at it. But honestly, that's not me who can answer the question.
Really?
Yeah, I'm a big regulation compliance nerd and fan, or fan sometimes. So I think the first kind of misconception about crypto is there is no regulation. Laws exist. Laws for financial products exist. The problem is it's very hard when you invent a new product to try and fit that new product into the existing classifications that are set out in our Corps Act and all the other licensing regimes that we've got. One of the challenges that I faced in my exchange days were, I think it was during a time, I was there during a time where the earn, borrow, spend model was becoming wildly popular because it was a really yield-starved market. Everybody wanted to go into an earn product. And that earn product was a really interesting challenge for us because when you start an earn product, the question is, are you an asset manager? Are you managing assets on behalf of people who are depositing? Sorry, it's a bit temperamental. And you can go to a lawyer and, well, this is a really costly exercise because typically what would happen if you invent a product, you go to a lawyer will do all this research and this legal research to come up with an opinion about what the product is, and maybe they say it's like a MIS, and that requires a license, and then you have to kind of go through the steps of getting the right AFSL and making sure that the regulator's comfortable with what you're doing and the product that you're issuing, and it can be a bit of a long process and a bit of a headache. In the meantime, you've got your competitors who are based overseas offering those same products online to Australian customers, and you're losing market share. So it can be quite frustrating. So the regulation exists. The problem is there's not much regulatory clarity as to how your products that you're creating can fit into the existing regime. And I think that's what a lot of people have called for in the last year. from the Treasury consultation. I feel like every second or third submission from an exchange was like, what regulatory regime do I need to comply with? And then in terms of self-regulation, I think Blockchain Australia is a really good example of that. They had a code of conduct for exchanges, which applied a lot of standards. It was completely voluntary to sign up, but they introduced a lot of standards that were, I think, taken on board by the regulator and said, oh, actually, that's a good thing. You shouldn't commingle customer funds with your own funds, or if a customer has assets on your exchange, you shouldn't go then deploy them and try and make a yield for yourself. So yeah, to an extent, I think self-regulation works. It's just about getting the market and the regulators comfortable that your self-regulation is on par with the standards that they would like to impose on other financial institutions.
I love what you said there in terms of the regulation exists. I think I'd like to maybe ask you to drill a little deeper on that, specifically in terms of ICOs, right? So imagine you've got a coin, right? And you use that coin to distribute revenue to people or a yield or something. Like, to me, that seems like it kind of maps very clearly to a real world area that's managed by legislation, right? It's like you're selling shares. Am I thinking wrongly about that?
I'll preface this by saying I'm not a lawyer. A lot of it is share-like. I think shares represent equity in a company, so you own a little bit of it, and with an ICO that's not necessarily true. But I would say, and this is why we have the need to do a token mapping exercise, because we need to look at all the different things a coin can do, and basically say, is it this product? Is it that product? Is it that product? So it's a big matching exercise. But I do see what you're saying, that ICOs and certain coins and even certain NFTs, right, can have the characteristics of the financial product that make you think, oh, yeah, that's basically a stock.
Yeah, that's kind of exactly my point, because if you think about it, one of the most tightly regulated spaces in the corporate world is the IPO, the launching on the stock market, right? You have to have your books publicly available, you need to be audited. There's so much scrutiny that goes into that. And sure, you can just launch a token willy-nilly and the public can buy it. But if the government starts looking at it and they go like, well, you're kind of selling shares in your company there, you fall under that jurisdiction. And then you could be in massive amounts of trouble. So I think what makes it tricky is that tokens are so versatile. They can act like shares, they can act like fractional ownership, they can act like voting mechanisms, they can act like applications. And so it's like Arturo and Mark said earlier, it's like, how do you just go like, yeah, we're gonna regulate paper because people sign contracts on paper. It's like, you've got this thing that can do all these things, and so having legislation that says, oh yeah, we're gonna treat tokens like shares, that's going to create more problems than solve them, because tokens are so much more than just shares. And that's kind of the problem space that we're sitting in. Is like America, some of the governmental organizations in America are now trying to regulate some of that as shares, but they're ignoring the fact that it's so much broader than that. And so, yes, you should absolutely think to yourself, what does your token do, and what do you want it to do? And again, yes, not a lawyer and not a financial license holder, but I would seriously think about what different functions your tokens hold. And if you can split those out into multiple tokens, you're going to be so much better off, because then you can apply the governance to the token that applies to that token. If you're treating it like shares, treat it like shares. Don't sell it to the public. If you're treating it like something else, then have that governance model applied to a different coin, maybe.
Great, thank you. Let's move on to Olga. When we were chatting before, you mentioned a conference or an event that you were recently at, which was predominantly sort of Web 2 audience, and how what sort of their points of interest were around regulation, blockchain, Web 3. Could you talk to us a little bit about that from sort of that perspective and what you're seeing?
Yeah, sure. So I think there's a main problem. So like I won't take much time. So there's three main problems. It's about like how much we need to, how much decentralization we need. So as you can refer to my previous answer in terms of like what you can put on chain and what you don't really need to. The second point was about regulations. We covered a lot. So this is probably our main problem, the main concern from a Web2 perspective, from Web2 people. And this, the third one is trust without trust. So how can you be sure about the original piece of information put in on chain is the correct one? So we were talking about, let's say, agriculture and supply chain, and how can you make sure that someone from the end who creates the first block put the correct information. So, and another thing was the green people talking about emission and blockchain mining, but I'm not going into details. So I think there's the three main problems, and we just covered them. So yeah.
But you are seeing kind of quite a bit of interest in the traditional.
It was a little bit. So I think the audience was like 50-50. Some of them, they knew about blockchain, and I think there was like people from different regulations, standardization.
Mm-hmm.
So some of them, they didn't even know about blockchain. The only thing they know is a chain of blocks. Literally, it was like this. So I'm not kidding. And we were talking about like how you can like utilize blockchain technology in different industries. So, and that's why we touched on agriculture, supply chain, and that's a little bit concerns, and they're not really, it's like trust without trust, like how can you trust this information being on the block?
It's really interesting because a lot of the times the conversation does seem to go back to regulation. Whatever you start talking about Web3, it does kind of go back to that. So I guess the next thing I wanted to discuss was how do you find the balance between having enough regulation or regulatory clarity versus stifling innovation? And Ash, I might put it to you as one of the builders in this space. You're creating a Web3 project. How do you think about that? And yeah, what are your thoughts on where's the line?
I think there's two lines and maybe two groups. I think innovation in Web3 space is the likes of what we haven't seen, right? If you look at the internet and how it started and how it took almost 15, 20 years to get mainstream and get like just out there where people could send an email, where in blockchain we've gone in 10 years where billions of dollars is just floating through the internet magically. And things are changing on a day-by-day basis. The speed of innovation in the space is absolutely mind-blowing and awesome. And the problem with that line is that blockchain by its nature is distributed and global. And governments are thinking local. They're thinking, how do we protect our local economy? How do we protect local IP? And blockchain goes against that by its very nature. So they are trying to make it so that mom and pop investors don't lose their entire retirement fund, and then the government has to look after them, kind of thing. And so that's why they want to regulate the space. That's why they regulate the stock market, and that's why we can't, invest my $20 in a startup because I don't have special investor status. It's to protect people. But in the same instance, blockchain is trying to protect people too. There's a lot of people that are disenfranchised, that are debanked, they don't have access to financial services. Like if you look at the whole, Ukraine war, the fact that people were able to send money and funds anonymously to help the Ukrainian resistance without facing persecution from their peers or from Russia, etc., because they were able to do that transparently but anonymously through the blockchain, that fosters more innovation and protects people who don't have access to those services, who are being discriminated by authoritarian regimes, etc. So I think there's always going to be this balance until that gets sorted out, unless we make contact with alien species and we become a single planet that has to bind together. But I think it's important questions that have to ask, and there'll be people that innovate within that local sense and meet the government regulations. But there has to be the people, the true proper degens that are fighting for people who cannot survive under a local governance or government.
Gilly?
One of my observations is that the more important the government perceives a segment of the market to be, typically the more regulation we see. So banks, super heavily regulated because most of us would have a bank account and it's kind of the way we do business, and kind of the way the world goes round, right? As Web3 and blockchain-based technology becomes more prevalent throughout society, and I feel like that's slowly happening, and adoption's coming through, I think we'll see more and more regulation. Now, when it comes to that stifling innovation, I couldn't comment on whether there's a discrete amount of regulation that will stifle innovation or not, but I think that in order to innovate, governments need to or should start considering expanding their regulatory sandboxes and creating a safe space where people can test out their new products and test out their innovations and be allowed to fail with, limited consequences. And so in Australia, we've got a small regulatory sandbox where you can launch about $5 million worth of products to a very small customer base to test them out. I know that overseas they've got a bit more, not comprehensive, but a bit more expansive regulatory sandboxes where you can go a little bit bigger and you get a bit more guidance and supervision from the regulator on how to get the appropriate licenses to take those products and those new experiments, to market once they've been, polished up. So I think that governments also need to be able to support regulation, and they can do that through sandboxes and guidance.
Great. And I think just to Ash's point as well on protecting, mums and pups and their retail investors, I think there's an element of separating the great volatility that exists in crypto space and thinking of that as something separate to scams and frauds, because those are two very separate things, and you can't really protect people from the volatility, so they can lose money through volatility in the markets, but you can potentially protect them from the scams and the fraud that is going on in this space. So that's, something that also to think about.
Yeah, absolutely. Scams and frauds, to me, they kind of fall into the same realm of hacks and exploits, right? And it's all kind of operational risk. One thing we're not very good at doing in the Web3 space is evaluating or expressing and demonstrating what operational risk you're exposed to when you're entering into a product. We go onto Aave and we see a pool for 1,000% APR, and you're like, sweet. But Aave is probably a really bad example because they actually get pretty good smart contract audits and stuff. But you're seeing 1,000 APR and you're like, great, I'm going to jump into it. You're not thinking, oh, what if I lose my private keys? Because the chance of me losing my private keys is probably pretty high. And you're not thinking, oh, what if I get hacked? Or what if Aave, there's an exploit and the pool gets drained? So we're always looking at that headline APR or APY and never thinking about what else could go wrong that could cause me to lose everything. Which is probably it's a really grim way of thinking, but just having that in the back of your mind as well, because there are risks that you don't see when you're looking at those juicy APYs.
Any other comments?
Well, I think both of you kind of allude to the line there, right? It's I think any governance that will come in from the government, any legal framework, will in itself kick off innovation to get around it. I do think from a self-regulation point of view and from a government point of view, the best line that they can draw is specifically that. It's how do we protect the average person on the street who do not have the ability to understand the space from losing their money? And some of that might just be education and guidance, right? I think that's what Canada is trying to do with the way that they're saying like they have a whitelist of like you can invest in these coins. We've done the research, they're okay, and the rest is kind of like you're on your own if you go there. I think that's a healthy line to draw because it doesn't say like the rest is illegal. It's just like if you're gonna have the license,
you're in peril. Yeah.
Yeah, if you're gonna have the license to deal with the average person's money, you're limited to these ones that we've rubber stamped. And I think that can bring a lot of innovation within the legal frameworks as well.
Thank you. Okay, we might start wrapping up. Where's Mark? Should we open it up to questions?
Yes. Questions, the favourite pastime of Melbourne folks here. So let's bring up, there is a question there, we'll come to that one. If this is a question for both chats really, because they were very related. So Arturo is here, Nathan, come on up. You can be the guard on the other side, and Liya and I will run around. No, have a seat. Liya and I will run around. So we'll go to the first question over here to this gentleman. This is where Mark does his cardio.
Hello everyone, and thank you for a wonderful panel. My question is, what happens when the regulators are potentially the oppressors? For example, before Uber came in, when Uber was coming in, the regulations were quite bad for like disruptive technologies, and people who started driving Uber would risk basically getting like mob attacked by the taxi lobby. But that was the law at the time. And so the question is, where are the boundaries of challenging existing conventions in order to achieve something new and better for everyone versus accepting the status quo?
Stay out of jail, I think, is the boundary that most people agree on, right?
Hands up who wants to go to jail. No one. Okay, good. Oh, wait, was that? No.
I think that it's an interesting question, and it's not a Web3 question per se, right? It's a revolution. It's kind of like a revolution question, right? You start off figuring out new products or new ways of doing things that perhaps go against the status quo in terms of regulation, and your choice is you either conform or you take a risk. And obviously Web3 has a lot of risk takers. The problem there is that I think that most risk takers think that the status quo should be different, and the stance is that you just fight for it. I think that the reality of the fight today is very different to the reality of the fight, let's say 2 years ago, because back then you could say, well, fuck it, I'm going to do it myself, and they can do whatever they want. Now you know that they'll put you in jail. So I think that you really need to wonder, right, and have a lot of legal advice and say, well, what is the border for me to go to jail, instead of just say, just YOLO into it unless you are actually anonymized, and then you can kind of do whatever you want, but you really need to have good cybersecurity for that kind of stuff.
Anyone else? Nathan? No? Any other questions?
I think I 100% agree with you on it's not a Web3 question. I think there are causes out there that's worth going to jail for, and for various people there's a different line. I think it's sad that you have to go anonymous to be able to fight those fights, but I do think that's one of the benefits we have. Technology provides the ability for you to be anonymous in Web3 instead of the tooling. I think the question is, are you fighting that fight to just make a crap load of money, or is there a real cause behind it? Are you trying to bank the unbanked? Are you trying to liberate the oppressed? Like, that makes a lot more sense than just like, oh yeah, I'm gonna, create a file sharing service and make a lot of money and go to jail for money. I think it's like you said, a values thing.
For all new questions, please state your name and date of birth. Speaking of anonymous, here we go.
My name is Del. I'm an 80s child. My question is a bit of a crystal ball question. 12 months from now, where will we be in the DeFi Web3 space? but 2 layers from a conservative point of view and also a bold prediction. Where will we be in 12 months for anyone?
Well, I think I can answer this question from even marketing and brand perspective. So you have to understand that Web 2, so when we're having the transition from Web 2 to Web 3, so Web 2 permits to change any information on chain, but Web 3 is actually decentralized and you own your own data. Let's go back to Meta and Google. They actually dictate what sort of information and on feed you have, like you can see. And brands, they can have this data, and the businesses, they can have data and push on business towards you. Whatever you open, the Google or like any social media. So that's it from a marketing perspective. And when you open the Web3, when you open Metaverse, will be a different content, absolutely different. Like, people have to be even more creative than they are right now. They have to create the storytelling, different interactive, different videos, everything. So like, you cannot buy a data from these giants. You actually have to create really interactive content. So this is the transition from the Web 2 to Web 3, but in terms of DAO, I think it's Ash.
I'm going to keep it nice and vague. I think a year from now, maybe even 2 years from now, we'll still be struggling with governments trying to understand how to legislate the space. So we'll still be struggling with OFAC, etc. From a technology perspective though, if you think 4 or 5 years ago, I didn't have a MetaMask, I had a paper wallet. Now MetaMask is like one of many wallets. I think the technology will increase its pace of evolution, and I think it'll become more user-friendly, and we'll see a lot more mainstream adoption, and the technology will far outpace what the adoption and the understanding of the legislative space will be.
Yeah, I've got a bit of a different answer. It's more at face value, so what will Web3 and DeFi look like? I think it's interesting if anyone who's really involved in crypto at the moment, there was a huge reaction to Tornado Cash, right? But what's really happened that's interesting is the approach has been to... Okay, mic's up. To find a way to move away DeFi products from companies that are regulated by agencies, but by governments, right? So the best example is for MakerDAO, how they can remove the requirement for DAI to exist with USDC that's issued by Circle, a US regulated company. So the main thing I see changing in DeFi and Web3 is how what we already have will shift towards being safeguarded from external threats by regulators, right? So I'm not saying that regulators will change their view, they'll have more options, because there's so many different views and values and ways of looking at it, evidently. But what's going to change for the crypto natives, I think, is what is the best way to provide what we already have and to innovate whilst not being overly exposed to these different changes. And then on top of that, there'll be a lot of growth in terms of application-specific blockchains, right? And this is now just completely me just nerding out, but like Cosmos and Polkadot, these layer 2s have released new roadmaps, and that's awesome because it sort of allows everybody to build their own idea, specialize it to what they want to do, and then make it regulated as they see fit. So if there's more blockchains coming out without people just relying on Ethereum and Solana that have their own view towards regulation and censorship, we can now say, all right, I'm going to build a product, my own permissionless and public blockchain on a layer 0, have it completely regulated, and have my own DeFi environment on this new blockchain that's entirely regulated. So imagine something like layer C, but its own blockchain. And more of those coming out because now the requirements to build blockchains have gone down. So the barriers to entry to build new blockchains has been significantly lowered. So the allowance for innovation through that one feature is just an oyster. So.
Did you?
Oh. No, you go for it.
Did you listen to Mark Pesce say what the future is going to be? So Mark Pesce is a futurist. He invented VR in like the 80s, the way we understand it now. His view on the future is that everybody's going to have their own blockchain. So if you want to have some of my time, you're going to have to buy my token to get into my calendar. That kind of, every application has its own blockchain. Very similar to that thinking. But I think we're far away from that.
Not 2 years, more than 2 years.
Yeah, at the moment everything can still run on the chains we kind of have, especially with zero knowledge proofs, etc. coming in the next couple of months.
But will they? That's the whole thing.
Pass the mic.
Will they, he said.
Yes. It's sort of, my point of bringing that up was like, yeah, they can, everything can exist on general purpose blockchains like Ethereum and alternatives to Ethereum, but will they? Because if there is regulation and we want to coexist with it, and we also want to innovate, and there'll be new blockchains coming out that, sorry, I'm talking very fast. There'll be new blockchains coming out that completely align themselves with regulation, and the change of regulation is.
So that assumes that blockchains can be regulated, which I don't know that they can be, because we're very multi-jurisdictional, and how do you regulate everything on the internet and that kind of thing? Decentralization, let's go.
A boring answer. I think that DeFi, not mine, not yours. I think that DeFi is going to look much more like TradFi in the short term. Because you'll see the bigger protocols that are actually making a shit ton of money, forced by regulators to actually act in a regulated fashion. And you will start to see the real innovation happening on in the fringes, but without a lot of volume, because you run the risk of doing things that you're not supposed to. And I think that it's just the only way that it can actually play out, because at the end of the day, as I was saying, jail is an actual card on the table. And if you are doxxed and you are worth a few $1 billion, like the people that are actually running these protocols, you don't want to take that risk, and you're just forced to go down that route. But it's the standard pattern of innovation, right? You have the dreamers that create the initial idea, and then you start to see the constraints that are set by reality. And right now, I think that we're going into that reality constraint episode in this chapter, right, or in this story. And once we figure that out, then we'll effectively end up with regulation actually changing, being upgraded, because we see what we're actually looking at, right? Because we get that level of transparency.
Hi, I've got a question. My name is Mark, but it's a question for someone else. Here we go.
Hey, my name's Kurt. I had a question. There's a conversation happening at the moment in the DeFi landscape that on-chain markets have a view to being split between regulated and unregulated in the future. And this allows innovation on one hand, but also those who want to take part in KYC regulated infrastructures to do so. What's the panel's thought on, I guess, how that future looks from that angle?
I think that makes a lot of sense, right? It's almost like having the cancer image in front of the cigarette pack, right? You still give people a choice to do shit that they're not supposed to smoke, but you're not taking away that option. And I think that we can see the government as an insurance contract, and the cost for having access to that insurance contract, especially in a place like Australia, is tax. Now, the insurance contract in regulated space gives you access to a certain amount of security, which you obviously don't get if you trade in unregulated markets. And I think that as long as people are able to see that, look, if shit goes bad, then it's all my own fault. Then yeah, it's kind of fair play, right?
Yeah, and you touched on this before, Arturo, when you said that there's going to be major exchanges are going to become more regulated, and then people will have the option to operate in the fringes. I know that DYDX, I think, has had some pressure to KYC their users. So it is happening. What's interesting and what I will always find really interesting is that licensing regulation is done on a nationwide basis. Usually, it's very hard, I think, to execute kind of cross-border regulation, and DEXs are very much cross-border marketplaces. So seeing how they can coordinate, all countries and all regulators can coordinate with each other to achieve some kind of regulatory regime that's global will be really, really interesting. But yeah, no, I agree with you, Arturo. There will still probably be the option to. There'll be some DEXs that will have and dApps that will have the appetite to not be regulated and just run the risk of falling afoul of regulators, and then those users will also run the risk of falling afoul of regulators and regulation. So yeah, no, I agree with what you said.
Yeah, I think the answer to that, which is really quick-sighted and fanciful, is that they're going to merge. So DYDX, one of the first, or the first exchange to offer derivatives that are on a decentralized platform, is now looking at including KYC. And yeah, they did. They had this whole, if you join now, you get $50 free, but you have to prove that you're one person and not 5 people, and just KYC. So to some extent, you could say that, like with Uber, when there was this disruptive technology, there was the threat that the creators go to jail, and that's going to be there. But if it's worth it, it's worth it. But then what happened is, because we have a government that is supposedly representative of the people, well, laws will change. So laws should eventually shift to where, if there's a demand for it and if the people want it, they're going to vote in parliamentarians, hopefully, that represent their views, in that they're regulating or allowing for some wiggle room in crypto.
Probably also worth mentioning that with the KYC thing, that means that they're complying with the anti-money laundering, counter and finance regime. There's more to AML-CTF than just validating your identity. There's a whole transaction monitoring component, refreshing your identity validation, explaining to people explaining or making clear your source of funds. That's also part of that regime. So KYC won't be the only component of that. There has to be transaction monitoring and then reporting of suspicious transactions as well.
Yeah.
Back to our first gentleman, another question. Mine's ticking away, I love it. Anyone?
Might have a crack. I'll have a go at the regulation question first and the innovation regulation question. I think what we'll see is the underlying principles of consumer protection. I think there's efficiently, honestly, fairly is a big one that comes up a lot in our rules in Australia. Those principles will remain the same. I think we'll find new and more innovative ways to demonstrate those principles. One really awesome innovation in the regulation space that I can point to in our world is chain analysis, right? That's so innovative, that on-chain transaction monitoring system. Hey.
Sorry, I'm from chain analysis.
Yeah, all good. We'll chat later. Yeah, I'm a fan. Good work, guys. So that's an example of a really innovative way to comply with your transaction monitoring obligations. So no, I think the obligations and the underlying principles will remain the same, but the way that we achieve those and get the regulator comfortable with the way that we're achieving them is gonna be where there's a lot of opportunity for innovation. As for the CBDC question, can someone refresh me on that?
Have him refresh.
Oh, CBDCs and blockchain, right. I mean, I still we don't do everything in stable coins today. We still like to get a bit of a Bitcoin, a bit of Ethereum, a bit of Solana. All those coins I still think are valuable just because people like to speculate on them, but they're giving us an alternative to a currency that's controlled by one nation, and it's a very nation neutral kind of option for storing value. It's also very volatile, but it's also very neutral.
I agree. I think a CBDC world ignores the fact that these multinational solutions that you have in blockchain, or sorry, across, like it's global, right? CBDC will again just be limited to a single country. So if you want to deal with it, you're going to have to exchange it to some other token or another CBDC. It doesn't solve any problems other than the local ones. And I think the local ones are important. People don't want to deal with cash anymore, but cash provides a real utility to people. It's an anonymous way to buy things. It's a store of value that you can control, that's not controlled outside of that or regulated other than taking it outside of your country. So I think until digital cash gets solved, there will always be the use cases for everything that's being built today outside of the CBDC world.
I think that it's your question is your wording in the question is really interesting because you use the word dystopian, and I think that that's kind of endemic to the entire Web3 subculture, and it a CDC world, a CBDC, that thing. It doesn't need to be dystopian per se. I do agree that it is scary to give granular control to a government that you distrust. But let's be fair. Australia is not many other countries. But at the same time, thinking that CBDCs give you a dystopian world automatically means that you kind of find comfort in opacity, in kind of being unseen, which effectively says that you're okay with kind of not fighting the actual fight if you think that there is a fight to fight, because what you want, if you think that's dystopian, you think that the way the government works is dystopian, it's bad. And the only way to actually change that is to bring all of that into clarity, right? And I think that the best way of bringing that to clarity is bringing that on-chain, because on-chain means transparent. So yes, it does mean that in the first period of time, you will be giving total control to the government, like Thanos level shit, right? But we're already there, right? And you can only fight that knowing what you're actually fighting. So the way that I see it is that through Layer C, for example, it's bringing Web 2 to the turf that we know, which is, bring the fight home, or bring it on chain, see what's actually happening, and have an adult, proper conversation about the change that you want to make happen at a society level, which is not a technological change, right? It's a regulatory, it's a legal change that you actually want to execute because you think that the world is unfair, blah, 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 whatever you think, right?
But that's the second part of the question, right? Is will they make a change? And I think the answer is yes. It's like the capitalist model that we operate under is that money makes a change. And so you already have token-based communities that are trying to buy the US Constitution, that are trying to buy basketball teams. I think we're a stone throw away from token-based communities starting to have a real impact by getting funds together and lobbying the government to bring about actual change.
Okay, I think we might wrap it up there. Big thank you to all our panel speakers. We'll be sticking around if you've got any questions. I think we've got a couple of community announcements coming up, and then we're on to networking.
So stick around. There's still two more little things to come up, little big things. But thank you to our panelists again. Thank you. So there's an event on tomorrow, and we've got the people that are running that event here with us. So do you guys want to come up on stage? Sisterhood, let's go. Round of applause, please.
Hi everyone, I'm Georgie from the Sisterhood. If you fancy another networking night Web3, please come tomorrow at the Oxford Scholar. We are hosting an event there. We've got an amazing panel of incredible females, Lisa Tay, Catherine Boychuk, and Lindsay Boston. They're all going to be answering all of your questions around Web3, marketing, and what to expect. So love to see you there. If you fancy coming out and supporting, hope to see you there.
So if you want to buy or get tickets for the event, tickets are $25. All the money raised is going to charity, Get Fitted for Work, which is an organisation which helps people who are unable to afford clothing to go to towards interviews and things like that. So all of the money is going to charity. So it's $25, canapes, drinks again as well. So if you want tickets for the Women in Web3 event, it's at Humanitics. But connect with Georgie Hubbard on LinkedIn, Georgie Hubbard. And she's got all of the links on there. But it'd be great to see. Men are absolutely welcome. I will be there myself. And it's important that men champion women in the space as well.
I've just been told it's in the Discord, so all the details.
It is in the Discord. Thanks, Liya.
Thank you.
You want to go? And there's something called NFT Fest. Who's heard of NFT Fest? Yeah, there's a few of you. This guy knows about it more than I do, so please.
Everybody's sick of being shilled, but I'm going to do one more. NFT Fest Australia. This is going to be a big event, 2-day event, IRL in St Kilda at the Alex Theatre. We have a room of 500, a theatre of 500, a theatre of 300, and a theatre of 200. So, roughly 1,000 capacity. We've run 2 events before. We like to think we get the best of the best. We'll be announcing 40 to 50 speakers tomorrow in our first wave. So you can go to nftfest.com.au to check that event out. I know a lot of tonight, and thanks for the opportunity, Mark, was about DeFi. This will be all about NFTs, but it's not just going to be what's the next Bored Ape. We're going to have some really high-level conversations around IP rights, CC0, all that type of stuff. So if you're interested in the NFT space, this event is definitely for you, 23rd and 24th of November. nftfest.com.au. You'll follow us on the socials, check out the website. Love to see you there. Thanks, Mark, for the opportunity.
That's great. Thank you very much. So before we get into networking, and it's already kind of started, you can hear it there, but luckily my booming voice should be able to be heard. I just want to say thank you to everyone who's come along today. We were kind of worried when there wasn't that many people and it was still, we were already getting close to 5:30, but it's a good thing because we got rugged on our audio visual, which meant that more people came in, but I think it's because it's daylight. Do people in Melbourne just not see daylight that much that you don't come to events when it's like that? But anyway, right now what we're going to do is networking here until they kick us out, and we usually head upstairs. You can head up to the rooftop early as well. There's a lot of really cool people here, whether it's regulation, it's governance, you want to talk about NFTs. All of this is the type of thing that we love to hear and talk about as part of this community, and we couldn't do it without you guys. So we will see you here again next month. Thank you very much.